Welcome back, everyone. I hope you're having a great day. And in this episode, we're going to take a look at the big tech companies who just shared their latest quarterly earnings and they absolutely crushed Wall Street expectations. Companies like Apple, Google, Facebook, and Microsoft have been carrying the market to new highs over the past few years. They're the largest brands in the world, and they're some of the most prominent players in our global economy. And they just shared their most recent quarterly earnings, beating both top and bottom line expectations, and have shown incredible growth over the prior year. So in this episode, we're going to break down the latest earnings from each of these companies, discuss the strengths and the weaknesses from their latest reports, and the future growth potential for all big tech names throughout 2021 and beyond. And before we do that, I'm going to ask you to please hit that like button and subscribe. I am the Gen Z Investor, and every single day we talk about the stock market, going over different stocks you can buy, and any major market news. So please hit that like button, subscribe for the daily videos, and of course, we're going to start off with Apple, who is the largest company in the world, and over this past quarter, they reported a 54% annual growth rate in their quarterly revenue, which came in just below $90 billion over the past 3 months. And right now, the company trades for $133 per share. They're up 91% over the trailing 12 months, and they are the largest company on the S&P 500 with a market cap of $2.26 trillion. And if we take a look at the numbers, they reported earnings per share of $1.40, beating the expectation that was set at 99 cents per share. And total revenue for the quarter came in at $89.58 billion versus the expectation of $77.36, so they absolutely crushed the Wall Street predictions. And their total sales grew 54% year over year, and during this earnings report, they announced a 7% raise to their annual dividend, and they will now be paying out 22 cents per share per quarter over their next report. And going forward, they also announced a $90 billion plan for share buybacks over 2021, which is absolutely massive. And this is up from the $50 billion they bought back in 2020 and $75 billion they purchased back in 2019. And if we take a look at how their sales came in across their multiple different categories, we can see iPhone revenue generated around $48 billion, beating the expectation that was set at 41.4 and was up 65% year over year. So the new iPhone release that came out in late 2020 still flew very well into this quarter, and we can see some massive expansion. And Apple's service revenue also saw some beautiful growth, up 26% over the prior year to just under $17 billion in quarterly sales. And this service right here is where I believe the future of Apple and the long-term sustainability of their massive cash flow will be coming over the next decade. I believe in Apple. They are the largest holding in my personal portfolio, and I'm still a bull on this company, even at their current size. And I think the services are going to expand rapidly over the longer term, and this number will grow to be the largest revenue producing category under the Apple umbrella. So I'm still very bullish on this sector, and right now, with $17 billion in quarterly sales, that has seen tremendous growth over the past 3 to 5 years, and I don't think it will be slowing down anytime soon. And of course, across their other categories, total revenue saw massive double-digit growth, and some other hardware products like Macs and iPads saw terrific growth over the latest quarter as well, and the company's gross margin improved to 42.5%, versus the expectation of right around 40% overall. And one last point I want to make about Apple regarding their services is the fact that they announced a $40 million increase over the previous quarter, and the company now has 660 million people on a paid subscription service, which is absolutely incredible. And those funnel through iCloud, the App Store, and some of their subscriptions like Apple Music, Fitness, and Podcasts you can get to right now. And like I said, I believe subscriptions are going to be the long-term growth factor of this business over the next decade, and I don't see any signs of slowing down, even from the largest company on the market. And now if we transition into the second big tech company we're going to go over in this video that just shared some incredible financial results, it is Google, or the parent company Alphabet, that trades under ticker GOOGL, for $2,359 per share, and similar to Apple, over the trailing 12 months, this company is up by 91%, and they have a market cap at $1.54 trillion. And over the latest quarter, Google showed massive revenue growth of 34%, which is incredibly impressive for a company that generates just under $200 billion in total annual sales. And they also announced a major share buyback program of $50 billion throughout 2021. And their earnings per share came in at $26.29, crushing the expectation that was set at $15.82. Total revenue for the quarter crossed $55.3 billion, once again, absolutely destroying what Wall Street was predicting at only $51.7 billion. Their cloud revenue, which once again is a very strong growth factor for the long-term success of Google, generated around $4.05 billion of total sales, actually slightly coming below the expectation that was set at $4.07. And then YouTube, the program we're going to talk about a lot in this episode, was up to over $6 billion in quarterly revenue, once again beating the annual expectation. And I think YouTube is extremely undervalued in the Google ecosystem, and over the long term, it'll be a very strong growth driver for their business as well. And we can see quarterly revenue over the long term continues to trend upwards after a slight pullback during the height of the global pandemic that really shut down small businesses and their ability to advertise. Google saw a pullback over that quarter, but from that low point, the company has gone through a major recovery, and over the past 2 quarters, they have set consecutive record highs for total ad revenue. And one thing I want to discuss with Google is the fact that I believe most investors are undervaluing the power of YouTube. And in the last quarter, they generated revenue of over $6 billion, which grew 49% over the prior year. And the pandemic has actually boosted this company in a very strong manner. 73% of US adults watched a video on YouTube back in 2019. But since the pandemic, in 2021, that has grown to 81%. 81% of the US adult population watches YouTube videos, which is absolutely insane. And of course, short form media content has been growing in popularity as of late because of competitors like TikTok, but YouTube is adapting and came out with a program called YouTube Shorts, which generated over 6.5 billion daily views throughout the past quarter, which grew over 3.5 billion from the prior year. So that's incredible. The company's continuing to innovate and adapt and is getting the views in whatever form of content, short or long, that is attractive to the consumer. And if we take a look at YouTube, analysts believe this is a media juggernaut that could actually surpass Netflix over this upcoming year. And if we take a look at the numbers, if YouTube can continue their growth trajectory throughout 2021, it's predicted that they'll generate between 29 and 30 billion in total sales over this calendar year. And Netflix over this same period is projected to generate 29.7 billion in revenue throughout 2021. So YouTube, which of course is owned by Google, so it's under that parent company, is projected to generate the same amount of revenue as Netflix, who as a standalone company is worth over 220 billion. And what's impressive about YouTube is that they really don't have to make the content. Netflix spends billions and billions of dollars every single year to create new and attractive content for their users. YouTube is a platform that's self-driven by the actual individuals on the platform. I create content myself, I put it to YouTube, and they distribute it, and I earn a percentage of the revenue that my videos generate. So I like their system better than Netflix because they don't have to spend capital every single year to continue to expand their videos. People are attracted to YouTube. The monetization policies of YouTube make it attractive for creators like myself to get on the platform. So I think right now, over the longer term, YouTube could actually surpass revenue in total sales in 2021 and beyond for many years to come. So this company posted some incredible numbers. I think they're one of the strongest brands in the world, and some of the major tech CEOs, like Jeff Bezos, has quoted as saying, "Google is not a company you try to destroy, it's a mountain that you try to climb." Because Google is so powerful, they dominate in so many industries, we use them every single day for pretty much everything we do online, that I believe this company will continue to generate massive financial numbers for long into the future. So now if we move on, we've already discussed Apple and Google, and we take a look at another major tech company that is similar to Google and operates in the ad space to generate revenue. We have Facebook. They currently trade for $307 per share, and over the past 12 months, they are up by close to 68%, and they're the smallest in terms of market cap in this episode, when they're worth $862 billion, and over the past quarter, they once again posted some incredible revenue growth of 48% year over year. So if we take a look at their numbers, the company generated earnings per share of $3.30, while beating the expectation that was set at $2.37. Total revenue in the quarter crossed $26 billion, beating the expectation set at $23.6. And their daily active users slightly missed the expectation, but still came in at a very impressive 1.88 billion, and their monthly active users, which is incredible to even say, comes in at 2.85 billion people. And if we take a look at the chart, over the long term, quarter over quarter, more and more people all around the world are jumping on to one of Facebook's many different social media platforms. 2.85 billion monthly active users over the latest quarter is insane. If you put that in perspective, the global population has over 7.2 billion people. So that means a large percentage of every person on the planet uses one of Facebook's products at least once a month. So their ecosystem is so large, so well diversified, it's so attractive and consuming under platforms like Facebook itself, its flagship name. They have Instagram, WhatsApp, Messenger, and many more smaller companies, all wrapped in to the massive Facebook umbrella, which controls a large percentage of the entire global population. And we can see that even though Apple is trying to hurt Facebook by changing their advertising policies and the different tracking between apps, the company does not believe they will actually be hurt whatsoever. And the CFO of the company says the difference after this new update from Apple will only be marginal on the company's total financials. And Mark Zuckerberg actually believes they're going to thrive after this Apple privacy change because Facebook already has the 2.8 billion monthly users. They already have all the data they can collect. They have more data than any other company in the advertising space. And going forward, all the other companies who are trying to use advertising are going to be hurt by Apple the same way Facebook is, but this company is already so large, they have the platforms to weather the storm and still continue to grow, and they outlined a plan to do that going forward. And Facebook's strategy is for all the businesses and the retailers who sell products to consumers and are buying advertisements to sell those products directly through a Facebook-owned app like the actual native Facebook or Instagram, so there's no need for Facebook to track inter-app movement to test the productivity of their different ads, because if everything happens within one of their own platforms, they already have all the data. And that's why they've announced the Facebook Marketplace, different Facebook shops, and Instagram shops over the past few months to get ready for this change from Apple. And the company believes they're already set up and well established enough to actually weather the storm very well. And how this would work is an advertiser could pay for a Facebook ad for a product such as sneakers. And they could do this on Instagram and advertise to all the different consumers who follow specific creators in the sneaker space. And if a user clicks that ad, it will take them directly to the company's Instagram shop where they can purchase those sneakers. So there's no more need for Facebook to track your link to another app, whether it be your website or a different mobile app to make a purchase. Rather, they're going to have all that process happen within the Instagram or Facebook ecosystem. So Facebook already owns that data, and the targeted advertisements can still be very valuable for companies because they'll just rather sell their products within the actual Instagram or Facebook owned shop to get the best of both worlds. And right now, Facebook is only charging a 5% fee, which is very low compared to some other e-commerce competitors in the market right now. And they understand the point is to not actually make money off of this 5% fee. Rather, that fee will be used to cover the taxes and the payment processing. But the real money is going to be by maintaining and growing the ad spend these customers and these retailers are spending within Facebook because of how well and how easy it will be to use and directly sell those products to consumers. Imagine if I run a clothing business and I have my own Instagram shop with all my different t-shirts and I run Instagram ads. I cannot wait to see how easy it's going to be where a consumer sees my ad, they want to buy my shirt, they click on the post and it sends you directly within the Instagram app. You don't have to go anywhere else to buy my shirt. You check out, the shirt gets delivered to you, I pay a small fee, and I can clearly see how effective my ads are because Facebook can easily track it within its own program. So I think this is a very strong idea for Facebook. I think they're going to implement it very well, and it's going to lead to long-term success and growth in their ad revenue, even after Apple makes their changes to their privacy policy. So I think Facebook will still be okay long-term. I don't think this drastic change is going to hurt the company too much. Maybe over the shorter term, we may see some pullback, but going forward, still a very strong brand in the tech sector, may be worth a buy for your portfolio at this current level. And now if we take a look at the fourth and final big tech name we're going to go over in this video, of course, it is Microsoft, ticker MSFT, currently trading for $254 per share, and this is the second largest position in my personal portfolio at this current point in time. And this company has a market cap at $1.97 trillion. And over the past quarter, they saw their fastest revenue growth since back in 2018. And taking a look at the numbers, earnings per share came in at $1.95, beating the expectation set at $1.78. And total revenue of $41.7 billion did come in above expectation of $41.03, and that represents a 19% annual growth rate over the prior year number. And if we take a look, every single category under the Microsoft umbrella saw incredible growth over the latest quarter. Every single sector grew, and they all expanded by double digits, except one single category, which still grew at 5%. So if you look at Microsoft as a whole, this is one of the most dominant software companies in the world. All of their business categories are growing at a double-digit rate, averaging between 10 and 30% annual expansion. And that's incredible. And what's most important is that their Azure cloud platform grew 50% in the third quarter, maintaining a very fast growth rate over the past year. And we can see 47 to 50% annual expansion quarter over quarter is incredibly impressive. And this is actually one of the hottest and fastest moving cloud and web service networks on the market right now. And this will be a huge growth driver for the company going forward over the longer term. So Microsoft is another company that performed extremely well. There's not much you can say other than the fact that their entire business equally all saw mass expansion. They're not solely focused on only one revenue stream for their total growth. Rather, the entire company is performing extremely well. So overall, we're going to kind of wrap up the video here. We took a look at the four biggest tech companies, Apple, Microsoft, Facebook, and Google. Took a look at their quarterly earnings. They all absolutely crushed it, performed extremely well, destroying analyst expectations, and they're all expected to continue to perform very well throughout 2021. And even after the most recent run-up, I think all of these companies can grow to much larger sizes. If you understand their business models, understand their future revenue generation activities, and you understand that each of these companies has a plan to expand their total sales and their income over the longer term, no matter what they're trading at right now, overvalued, undervalued, it doesn't matter, they're still projected to be larger in 5 or 10 years than their current position. So it may be a nice time to add some tech to your portfolio if you are underweight or you feel any of these big companies are trading at an attractive level. So now we're going to wrap it up. I want to thank you for watching till the end. I am the Gen Z Investor. Please hit that like button, subscribe, and join the community if you haven't done so already, and I will see you in tomorrow's video.